Global Market Intelligence Chief Investment Officer, and Troy Gayeski. He's Skybridge Capital Partner and Senior Portfolio Manager. To you first, Erin. It looks like investors think that the coast is clear. Do you think the coast is clear to get back into the markets?
No, I think we could still see some volatility over the next few days, but I do see this as basically us returning to rationality. When we really look at it, when we look at how much of revenues come from Europe, particularly for U.S. companies, only about 5% of all revenues come from Europe for S&P 500 countries, and only about 25% are even foreign revenues. So we are still a very U.S.-centric country. A lot of the growth that we've been seeing is coming from the housing market, and so I think that will be able to sustain the moderate growth that we're expecting within the U.S. I don't expect the U.S. markets to suddenly plummet because of this.
Okay, at this very second, we need to point this out. I don't know if you guys can give me an intraday of the Dow. We're up 263, 264 points. This market is continuing to climb in these last four, make it 3.5 minutes here. And you can see we are at session highs or just slightly off it. Troy Gayeski, were you a buyer in the ugliest moments of yesterday and Friday?
Well, from our standpoint, there are so many good cash flow generative assets tied to U.S. real estate and commercial mortgage-backed securities that's where we're going to be legging in going forward. But basically what the market's saying today is Brexit's going to be a big long-term issue in terms of uncertainty. But with interest rates this low in very little places for the average investor to invest, equities are the best option in a tough neighborhood right now.
Yeah, look at the S&P up 34, very close to session highs. John Lonski, you take a longer-term picture, and there are people who say that we will still have a lot of so-called headline risk because we haven't even seen the United Kingdom start to extricate itself from the promise of the referendum. Do we start to see some insecurity here? Do you see any opportunity, or I shouldn't use that word, chance of a recession?
Yes, I think the chance of a recession is only going to increase as we move forward. You know, the current upturn is 7 years old. It's not getting any younger. Keep an eye on the much faster growth of labor costs vis-a-vis corporate revenues. With first quarter real GDP, we have an estimate of net revenues. It's called gross corporate value added. That was up 3% annually. Employment costs 5%. Believe me, you cannot indefinitely have employment costs grow 2 percentage points faster than sales without having to pay the price in terms of narrower profit margins and eventually fewer jobs.
Dow Jones Industrials up 260, and we are about 3 minutes to go before the closing bell starts to ring. Erin, Gibbs, what John just said makes a lot of sense. Will the markets, though, even be interested in turning to look at things like fundamentals, earnings, the old school stuff versus the tragedy that we've seen just in the last hour at the airport, Ataturk in Istanbul, or perhaps the situation involving the UK exit from the European Union? Which takes precedent in an investor's mind?
You know, we've been struggling with these macro issues for over the past 18 months. So we're looking at, good or decent fundamentals and then macro events that'll bring in this volatility and push the market down. And those big events are the buying opportunities because we do return to fundamentals. We do return to growth. And right now we're looking at about 5% growth over the next 12 months for the S&P 500. That's not great, but it's not bad. It's better than the rest of the world. And so that's ultimately going to keep U.S. equities elevated for at least the next 6 months.
Again, Troy, Erin says, you can look at that focus, but we do have very tragic news out of that airport explosion. Again, this was double suicide bombers. The Associated Press is reporting that 10 people were killed when two suicide bombers blew themselves up at a right before the security area where we know there are lots of lines.
Yeah.
What does that mean for, the investing psychology?
Well, unfortunately, at this stage of the terror threat, markets are more inured to these risks, and it would take something much more substantial, we think, to knock markets into a 3%, 5%, 7% correction, something like an EMP attack or chemical or biological. But we don't think this will shake things as much as Brexit did.
John Lonski, Erin Gibbs, and Troy Gayeski, thank you so very much. Again,